So in this video we will do the question number 5, that is tire company. So TYR, a limited liability company, produced the following trial balance at 31st October 2007, and we are provided with some additional information down below the trial balance. So we need to prepare the statement of profit and loss and other comprehensive income for the year in 31st October 2007 and prepare the statement of financial positions. Okay. So what is the additional information? Let's read out. So first point given is inventory was value at 194,000 at 31st October 2007. So this is closing inventory value. So I have here done working one, closing inventory 194,000. And second point is telling prepaid administrative expense amount to 12,000 and prepaid selling and delivery expenses amount to 28,000 and accrued administrative expenses amount to 17,000. So we are having a prepaid administrative expense. So prepaid administrative expense I have written here 12,000, and as well as we are also having the prepaid selling and delivery expenses, that is 28,000, and accrued administrative expense, that is 17,000. So prepaid administrative expense is our asset, so it will reduce our expenses, and in SOP we will show it in the current asset portion, as well we will also show the prepaid selling delivery expenses, and accrued administrative expense we will show in the current liabilities. So in SOF, in P&L, it will reduce the administrative expense and it will reduce selling and delivery expense, and it will add it to the administrative expense, this accrued administrative expense. Now the point 3 is the land is revalued at 55,000. It means revaluation surplus is 55,000. So we will mention this revaluation surplus in the other comprehensive income for the year, and we will show it in the equity portion of the SOFP. So working for is the premises are to be depreciated at the 4% per annum on a straight line basis, and the plant and machinery is to depreciate at 10% per annum on a straight line basis, and all the depreciation should be classified as a cost of sale. So in this question it has been mentioned that depreciation should be mentioned in the cost of sales. If these things has not been mentioned here, then we will show depreciation charge in the portion of administrative expenses. So priorly if not mentioned, you will show it in the administrative expense, but if it is mentioned in the question, that we have to show in the cost of the sales. So what is the depreciation charge on premises? It 4% per annum on a straight line basis. So it means on a straight line basis we charge depreciation on the cost. So what is the cost of the premises? It is 350. It has taken 30 in the common. So 350 into 4% I did, and that is the 14. And after that plant, what is the depreciation charge on the plant? It is 10% on a straight line basis again. So we will charge this 10% on the cost of the plant, and the cost of the plant is our 220. So I have charged 220 into 10%, that is 22, and we will add this 22 and 40 in the cost of sales. We will show this depreciation charge in the cost of sales. So what is the next point in the additional information? Income tax liability based upon the profit for the year in 31st October 2007 was 40,000. So we have already provided with the tax expenses in the profit and loss. Just wait. Sorry, actually this is the financial statement question. So we have provided in the trial balance the tax expenses. No, it is not given in the question. So we will take the whole amount to both to the P&L as well as SOFP. If in trial balance, if there is any balance given for the tax, that is, if tax is having the debit balance in the trial balance, so it means it is under provision. We will add that under provision amount to this estimated amount for the P&L, and in SOFP, this whole estimated amount should be kept in the current liability portion. So we haven't given any taxes related anything in the 12 balance. So this tax for 40,000 will be this for this year. And point 6 is that equity dividend paid represent the full annual dividend for the 4% preference share, with the balance being dividend paid to the equity. So it means dividend paid equity dividend paid represent the full annual dividend for the 4% of preference shares. So what is the preference share amount? It's given, it's 200. We will charge 4% here, 8, and there is some given that in trial balance dividend paid, that is 20. So it means 8 is related to the preference irredeemable preference shares dividend, and remaining balance, that is the 12, is related to the equity dividend. So now what is the next point? So nothing is given, and one more thing we have to do is we have to calculate the interest on the loan. So I have calculated 12% up to 50, that is 30. ये आपको खुद से करनी पड़ेगी, आपको एडिशनल इन्फॉर्मेशन में नहीं भी दिया हो सकता है, बट हम लोग ने प्रॉफिट एंड लॉस जब बनाते हैं वहाँ पे नीचे में इंटरेस्ट चार्ज करते हैं. सो ये खुद से आपको करनी पड़ेगी. इवन इफ क्वेश्चन में इफ एडिशनल इन्फॉर्मेशन में दिया है दैट इट हैज बीन नॉट हैव बीन एक्टिव्ड और नॉट बीन पेड, देन ठीक है. अगर नहीं भी दिया है तो आपको एज्यूम करना पड़ेगा इतना इंटरेस्ट चार्ज हुआ है इस साल का, आपको खुद से कैलकुलेट करना पड़ेगा. सो बी केयरफुल. सो नाउ वी विल मूव टू द P&L. Okay. So what is the revenue given in the trial balance? Revenue will be down. Yeah, it's here 2569 revenue given. So I have kept here revenue equal to 2569. Now we will calculate cost of sales. For that we need a opening inventory which is given in the trial balance, that is 210. 210 is our opening inventory, and then purchase amount we are having 1745. Okay, and after that we will minus closing inventory which is given in the additional information, that is 194,000,030. I have taken a common, so 194 we will minus. Okay, and we have also given carriage inward, that is also added in the cost of sales, as well as given return outward, that means purchase return, we will also subtract this 34. And one more thing given in the additional information, that depreciation should be charged on the cost of sales, so we will add depreciation as well in the cost of sales. So when we will add all these or subtract all these amount, we will get the at the end 1778 as our balance for the cost of sales. And now we will minus this cost of sales from our revenue, and we will get our gross profit, that is 791. So now we will subtract distribution expense. We have given some distribution expense in our trial balance. So here it is 292, as well as some more information related to the selling and distribution expense have been provided in the additional information, that is prepaid selling and delivery expenses. So it prepaid is our asset, so it will subtracted from the distribution expense. So I subtracted 28 30. I have taken a common, so we will get 264 as our distribution expense balance. Now we will subtract administrative expense, which is also given in the trial balance, that is 255, and also we have been provided with this kind of an additional information related to the administrative expense. So here it is prepaid administrative expense, so it is our asset, it will reduce our expenses, so we will subtract 12. And some accrued expenses, accrued administrative expenses has been also given 17,000. So we will add this accrued expense 70, and we have also given the carriage inward cost, that is 18. So we will add carriage inward cost. So altogether we will get a 278 balance related to the administrative expenses, and when we will subtract this distribution expense and as well as administrative expense, we will get our operating profit for the year, that is the 249. And now we will subtract the interest which we have calculated above. Wait, I will show you. There it is, 30. So we will subtract this 30, and we will sorry, one more. Yeah, we are also having the bank overdraft interest in the question, so we will add this interest in the finance cost. So we all together we are having 39. So after that we will subtract tax, which is also given in the additional information, that is 40,000. We will take a 30 as common, so 40 we will minus. So we will get our profit for the year, that is 170. And for the other comprehensive income, will add valuation surplus, which is also given in the additional information, that is 55,000. So altogether total comprehensive income will be 225. Now we will move to the SOFT. So let us start with the non-current asset given in the trial balance. So we are having a premises land, first land 495, and we are also having the revaluation surplus related to the land, which is given in the additional information, that is 55. And we will add this 495 plus 55, we will get 550. 30 I have taken a common, and we are also having premises as non-current asset, that is 350, and depreciation is 20. And we have also calculated depreciation for the premises above. We will also subtract it from the premises, that is 350 minus 20 and minus 14 we have calculated earlier. Wait, I will show you. So yeah, premises depreciation 14. We will subtract this to get our carrying amount of premises. And we are also having plant and machinery as a non-current asset, that is 220 minus 30, and we have calculated depreciation above. We will also include that, that is 22. So all together we get 168 as our plant and machinery. And we are also given with some intangible assets in the trial balance. Yeah, patent and trademarks, that is 200. So we will also add 200. All together we are having a non-current asset, that is 1 2 3 4. And now we will go for the current asset. What is our current asset given a trial balance? We are having inventory, which is given in the additional information, that is closing inventory 194,000. And then in trial balance what we are having related to the current assets, we have included all these things. So receivable, yeah, receivable, that is 875, here I have included. And we are also having the cash in hand, that is 12. We'll also add this. And we are having bank, but be careful, bank is having a credit balance, so it means liability, so we won't include it in the current assets. Next we are having this much is only. So altogether we are having our current asset is 1121. And when we will add this non-current asset as well as current asset, we will get 2355 as our balance for the total assets. Now we will move to the equity portion. So let's start with the share capital. So we have given some share capital balance in the trial balance, so that is 800. Okay, and irredeemable preference are also shown in the equity portion. So IRD 200 I have taken. Then share premium also be shown in 100. Revaluation surplus 135 plus 55, which is given in the additional information. Okay, here we are having 55. One thing I forget to mention, we forgot to mention prepaid expense. Prepaid is our assets, so we will also include 12,000 plus 28,000 in the current asset 40. retained earning 190 plus profit for the year, which we calculated earlier, that is 170. So don't take 225. Okay, be careful, take a 170. That is our profit for the year. 225 is our total comprehensive income. So 170, and dividend is paid, that is given in the 12 balance, that is 20. So we will minus this dividend, we will get our closing retained earning. So all together we are having 1630 as equity. Now we will go for the liability. So we are having a loan. Yeah, 12% loan, 250 as our non-current liability loan, and for current liability we are having payables, that is 318, and bank 85. And next we are having tax. We are also having interest. So in trial balance, the amount given for the loan interest, it means 15 has been paid, and we have calculated earlier, that is 30. So means 15 is remaining to be paid. So 15 is our liability, and after that we will have tax. That is 40,000, and we are also given that accrued administrative expense, that is 17,000. So we will add all these amount, we will get 475 as our current liabilities, and when we will add non-current liability as well as current liability, we will get 2725 as a total liabilities. So when we will add equity plus liabilities, we will get 235 as total balance, which is equal to asset. So now in the question it has been asked to calculate gross profit margin as well as, what is the question? You should ensure that preparation of the statement of profit or loss and other comprehensive income and statement of financial portion is correct before you okay. So we have to calculate the gross profit margin, pre-tax profit margin, and current ratio, and acid test ratio, and gearing ratio, and we have to make comparison with this figure.